The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this, by now I've written it so many times, 10th day of March. My pleasure to be here Monday through Friday, last day of the week, the weekly charts. This is really important because we could get, and I'm pretty sure there's no way on earth that we can go beyond that March 1st big spike up to create new highs in the Dow and the S&P. This should be Peak D. I'll talk all about that. Technical Friday today. Dow's now down 10 cents. It was up 70 points or more before at 20,855. The S&P is still up. It's up 3 at 2367. I'm showing you the chart of the 10-minute chart. Now, there's a particular phenomenon that I discovered years ago, and I call it the single leg A up. And that, in this case, it happens to look like a peak F. It could be a peak F, but it's a move that comes after a news-related event, usually early in the morning. Usually the futures spiral up, and then they give back a chunk of the gains. But it's a terrible failure if they not only give back the gains, but they go negative from where they were. Well, it started off this morning at 8 o'clock. The S&P futures were at 20. This is the March, 2373. 25 was the low. Spirals, and I really mean spirals up to 2379.75 at 9:50. That's an hour and 20 minutes after the news event about the very high jobs report. We've got a low of 2370. Then the bulls couldn't give up, so they give a big push, and the push goes to just over a 50% rally to 2377. It makes the pattern, and we've been speaking about this for so long. It's the H pattern. It's the right shoulder failure pattern. It's the pattern that says the low bar on the left, if it's taken out and cannot be pierced to the upside back above the left side low within, it's usually 2 bars. Sometimes I say 3 bars, but it's really 2 bars I like. That's a negative, and that makes it serious resistance. So what we've done is we've gone down to the 236,625 level, trying to form some kind of a base. Stochastic showing there's a little bit of strength. Now there can be a bounce, but the fact that we took out the 2370.75 level says all you need to do is think, okay, perhaps you can have one more arch formation. I haven't got the CD book out, my CD book, which shows the pattern. I'll do it in a while. These patterns repeat. It's like if you have a template and you could just overlay it onto your chart. This is what happens in all time frames over and over and over again. Why? Human nature. That's all. These are fractals of human nature. And here we see the E-mini. Made a peak F and a Chapman wave 5 in this new technique that I've developed over the last 2 years, and says that could be a significant top in time. I don't know yet in price. At the peak D 2401, round number high that was formed back on the 1st of March. We filled that big candle. We've gone below it, tried to go above it, hit some resistance level, and now it's going to be really interesting. Why? Because what I said to my subscribers this morning, and I showed them very clearly, that there was a cup formation forming in the 120-minute chart. We had completed our 5 to the bottom. We did the 5 to the top and the 120 as well. Isn't it interesting? We've got a 5 in the daily. We've got a 5 in the 120-minute chart with a potential 5 in the weekly charts. What does the 5 mean? Don't have to worry about what it means. We'll see what the result is, and we'll talk about what it means later on. All it says is, at 5, you better be careful because there could be a turnaround. And that turnaround, in this particular instance, is sharp. It hit the Dow, ran up to the 20,940 level. So where's that? That's right in the middle of the gap again. And what's really important is that the 120-minute chart, same chart on the right with the MACD and the stochastic, shows stochastic has confirmed the rally in the price, but the MACD is still very flat. It is starting to see the histogram shrink a little bit. So in sum, this is a time for caution. I think that we've got limited upside. Maybe this time we could still see some limited downside. The more work I do on this, the more I'm beginning to think, hey, too many people are thinking that there's limited downside. There could be limited downside. I'm not going to get too excited until the Dow takes out 20,700 to 20,670 support. If it does that, that's going to be a big negative in the technicals as well as in the methodology that I'm using. Why? Because this could be, I haven't done it yet. I've been laying off, done it in background in my mind. I know what it is, but I like to put things on paper so people can see what I'm thinking. This could turn out to be 1 right here, 2 right there, and then a lower low coming here. Now, what I wanted to point out in this particular chart, where was it? Right here. This is the 10-minute. And the big question is, we've just got a D. Is this still a high-level consolidation as the SMH, the semiconductor index, the XLV, the healthcare, and some other indices kind of stall up at the high level? They don't break down, but they just stall. They go sideways. We'll know soon enough. My thinking is today would have been a great day for a reversal, exactly what we've seen. So we'll just see how this plays out. So let's go on. We've got, we've got time. Here we go. INDU. This is the Dow. New keyboard I'm trying to get used to. Unlike a piano keyboard, this one, the accuracy you don't know until you see it. You don't hear it. Okay. There's the 9-period moving average on the Dow. 2020, I said to my subscribers, 20,890s to 20,000. Can't remember right now. I think, that's right, 20,990 to 21,020s is kind of the upside resistance. We're going to be watching this. Look, the MACD and stochastic didn't budge. They are negative in the daily. So the Dow, watch that 20,677 area. If we take that out, it's very negative. On the S&P, SPX, we've got the same thing. If the S&P takes out the low that was made yesterday of 2369, 2354, very negative little arch formation. Upside has strong resistance at 2381. Weekly chart in the Dow and the S&P, it looks like it's going to be a peak D unless something amazing happens. Let's get rid of this 120-minute chart right here. And the monthly chart is still very strong in all the indices. Now, this is going to be very interesting. QQQ series, did it go to a new high of 131.68? No, it went to 131.60. Is this a little double top here? We'll know soon enough. By Monday, this time Monday, we should know. In the meantime, back at the ranch, this could be a peak D. Oh, we haven't got time to, I'm going to do gold as we go to the gold. Yeah, gold is up $2 at 12.01. Fascinating. I don't want to rush through this. Let's take our time. There's no rush. End of the week. We'll get everything straight because we want to start looking at what could happen next week. That's what I wanted to do today. Dow is up 5, S&P is up 3, Basil Chapman, Tiger Technicians up.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We're back. Dow's up 19, S&P is up 4.5. This is what I wanted to show you. So within the Chapman Wave methodology, we'll see this every time. I want to, because they always have new people coming in. There's a core concept in the Chapman Wave. You identify the lowest, most obvious low bar. That can be really easy. It could be kind of difficult. But most importantly, you identify it, and then from that moment on, each successively higher peak gets alphabetized. In uppercase on the upside, lowercase on the downside. The objective has always been to get you to at least a D. Other things can happen at a D. And this went A, B, C, D right here, and that's the look. So what have we got? We've got gold. The reason why I want to take a moment is just to be able to clarify what methodologies, why, etc. So what we're looking at in gold on the daily chart, let me just open this up nicely. You see, when you're looking, I love this. Have a look at this chart. Doesn't look like it's a bull chart, and then you pull back just a little bit in a single leg. Well, it's almost like a single leg down. You got a leg B, could be trough B. MACD, though, is very negative, and stochastic is deep down in 6% area. It says any pop-up could just be a pop-up. That's really what it's saying. My big concern on the weekly chart is that you've got a single leg up. Well, it's two legs, but it's like a single leg up to a B. Whoa, whoa, whoa. I wanted to talk about that as well. Where was it? Single leg A. Yeah. Oh, man. Oh, I'll find it because it'll pop up in another minute. So I'm going to the chart on the left here. This is the day. That's the weekly. This is the daily. So the daily looks really positive. It's just a kind of a pullback. It's above the recent most important low that was made there, just under 1180 back in late January. And, oh, this is, it's just a kind of like a single leg down, even though it's a leg B. Then you got to do this. Wait a minute. Wait, we made a peak E way back here in July of last year. And that was after touching the 200-period moving average, went to the E to the double top. This is a continuous contract, so the price might be a little different. At 1390.3, that was on the 6th of July, made a U-shaped pattern, cup formation, and couldn't hold it. Stochastic and MACD were real poor. And it comes tumbling down, and then there's another buy mode that goes in place on the October the 7th, and it goes peak A, B, C, D, gets you to the D, but then it goes one more spike up. This is a pattern that I call the Chapman Wave Rogue Wave. What does that mean? It means after E, you get all these signals. See this bar right here on the 7th of November? Let me open this up so you can see what we're talking about. On the 7th of November, The MACD starts already turning down. Stochastic is already giving you a sign that it is failing right there after that doji turned down. It says that if you were short this instrument, it doesn't matter what it is, you're correct in being short because everything's pointing to going down. And then suddenly there's this crazy news event, whatever it was, just happened to be the news event of the election, and gold spirals all the way up to 1343.6. That's the evening of the 9th of November. And happy birthday to those people on the 9th of November. And then what happens? It turns around and closes towards the low. Well, the MACD and stochastic were doing. Now, this is my contention. This, in my CD introducing the Chapman wave methodology, this is what I talk about. There's a sign at the beach that says high tide at noon. Well, this particular wave didn't see that sign. And when it reverses back down, it's as if, ho-hum, the person short on this side and the person short on that side the day before and the day after is just saying, ho-hum. Let's just say they went out, they had no buy stops in place, and they say, oh, that was great, whatever it is, we're going down. But the person here, and this is the thing about the Chapman wave, rogue wave, it goes above the previous high. Usually it's an E or a D or an E. It goes to an F, sometimes a G. And then the bar that takes it out hangs around at the top just long enough to get those people who were short to cover. It gets all those people that were long and got out saying, oh, I got out too early. It's going to break out. I'm going back in. Just long enough for them to do that. And then by the end of the bar, and that bar could be anything. I'm looking at these mostly as daily bars. Kaplop. It goes right back to where it was on the 200-period moving average and continues declining. Then it has another buy mode, 1124.3, back in the middle of December, and it goes peak A, B, C, D, E. It goes to an F because, look, the MACD fast-moving average is showing no signs of deterioration. It just pulls back, it deflects from that level and starts another A, B, C, D, and it goes to a D again with a doji high on the 27th of February. But at this point, the stochastic and the MACD are all failing. And that's the reason why I always say, look at the big picture, because when we were looking, if you didn't know it, if you were just looking at the data, you say, oh, it made that top. It's in between the 200-period smooth moving average, simple moving average, and the 200-period exponential moving average, and now it's gone below. Whoops. But it's holding the low. No. The weekly chart shows you that gold is continuously, since that major high that was made back in July of last year at 1390.3, has continually been failing at let me make this as strict as I can, right there. It's continued fading below the 200-period simple exponential moving average and the dashed trend line, what I call the falling axe resistance level. So that says to me, we need a little time. We need a little more time to see gold form some kind of a base. Today's a good opportunity. I don't know if we can do it, but it needs to form a base to be able to say, you know what, the major trend in the daily is starting to change to the positive. That should help the intermediate term trend of the weekly. And the only way I'd be able to say that, if I start to see gold trading between 12.20 and 12.45, somewhere in that range right there, I'm going to say, hey, nice. Now we're rebuilding strength. Okay, I wanted to do that because it's Technical Friday and I had a bunch of calls about gold and questions. So let's do this. We've got a question, a very good question about the VIX.X, the VIX index. See, the VIX is down 51 cents at 11.79. The candle that's formed today, Friday, if it's green at all, it'll be the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Out of 20 weeks, it'll be the 1, 2, tiny little one there, 3. It'll be the fourth one out of 20 weeks, 20% accuracy rate of. To me, that's saying we're starting to build some pressure on the upside for the volatility index, but it's not the instrument yet. And thank you. Chris sent me a really interesting article. I haven't had a chance to study it. Anything to this, Basil? Personally, I haven't noticed a difference in the behavior, or maybe just that it's a little bit slower to pop up these days. But other than that, I haven't noticed a big difference, even over the years, but I would love to hear your thoughts. Thanks. Hope all is well, Chris. And he's talking about the volatility index, but then he sends me something, and it's called, this is really, I'm going to try to, if you can Google it, it's worth reading it. It says Wall Street Journal, Wall Street's volatility pioneer. This is the guy who really discovered the attributes of the VIX index. The pioneer searches for latest fear trade. The researcher whose work foreshadowed the VIX now has his eye on an entirely different barometer of market uncertainty, ambiguity. So I always joke because what I say is, yeah, it could go up, and it could go down. And that's ambiguity, right? The VIX is an instrument that says it is working in a particular manner, but all you need to do is say 13s is the number that says the volatility is coming back into the market on the downside. Under 13 in the 12s and 11s and 10s, it says there's still residual buying. I'm making it as simple as possible. I want to use this as long as I can. The VIX index. Dow's up 34, S&P's up 6. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back and just quickly checking the emails on this side, emails on that side. Yep, we're doing good. Okay. This is going to be very interesting for me. Remember the concept, lowest low bar, you count each successively peak, you want to get your peak D, other things can happen. We saw what happened in the gold chart. So this is the 2-minute E-mini, and it went to a buy mode right there at about just after 8, and it goes peak A, peak B, peak C, peak D, and it pulls back. Then it goes peak A and a B minus, that arch formation. Then it goes goes to an A minus, arch formation. It's getting a little tired of that, so now it's taking a little more time to try to rally. And what's really important here goes to an A minus again, the arch formation. And now it's trying to form the cup formation. And there's a left side, right side price time match that says this candle right here, the doji candle of 1034 to 1036 in the 2-minute chart at 2373 round number high. That could be a target, but it has to be hit by 11:38 this morning. So we'll watch that. Now, I want to do a couple of other things. Let me finish up here. So the VIX index, I'm just going to make it as simple as possible. It's making higher lows, but not yet really higher highs and staying there. My thinking is that today was the opportunity for the market to say, you know what, we're going into a brand new buy mode. Remember, let me just do this for 1 second because I have to at least show you what my thinking is, because then what I'm saying is associated with the thinking. And there was a question the other day when I was being interviewed by Tom. What are all these? Are these stalk leg formations? No. These are the technicals in the weekly chart of the Dow. And the Dow held above 80% through that period there, and then it broke down. Held through 80% through that period there, and broke down, and then started a brand new spiral to the upside to D and E. That was the 19th of August at 18,868. Comes back down on the 4th of November. We get that turnaround from the 17,883 low. And look, once again, the technicals were not holding, and through that particular period before we spiked up. Then it was a way shorter period. Look how short that was. And all of a sudden, you got a breakout to the upside. And my thinking has been that this quick spiral to the upside is starting to run out of energy. It's got, you see the dashed line right here? It just snuck above it a tad. Now it's back into what I call the Chapman wave reversal zone or repellent zone. If it breaks above that, Steve Rose always likes to say, a bullish pattern that doesn't confirm becomes a very bearish, or a bearish pattern that doesn't confirm becomes very bullish. So this is the same thing here, that this should be, if there's a break to the upside next week above 21,169 in the Dow, that is really bullish. That goes to a leg E, and that could be a spiral to the upside. I'm thinking that the stochastic at 95%, almost 96%, is just beginning to get a little tired. The RSI, the relative strength is, the on-balance volume is, the MACD is still good, but it is turning down. I think we got limited upside, but 20,600 to 20,450 should be a containment area at this point, I'm thinking. Just wanted to show you, this is what it says, technicals, and these things are not. Now, this is the Chapman wave stalk leg. We don't even have to talk about that yet. I'll get into it later on. We haven't even made a peak, even though it's in leg D. Let's talk about that later. Now, what I wanted to say is the spike that we had this morning should have held strongly at about a plus 75 to plus 82 Dow. S&P should have been about a plus 10 because it's been a little stronger than the Dow lately. And that should have been followed by an up move on Monday. And the way it's acting right now, it says to me, lower lows and lower highs seems to be the theme based on the technicals. So now let's go to, so that was gold. I was looking at gold. So gold is saying to me, this is the candle that says, now is where I want to try to start some kind of a basing formation. And my pattern that I looked at is said, yeah, maybe it's going to pull back, jump and then pull back and retest. So I'm putting in the little arch formation that says, yeah, there's enough room to bounce from 1119, let's call it 1200, to the 1218, 1223 area. That's the big test. All right. Well, it also happens to be the big test, DXY, for, I did remember to look to see if there were any calls, DXY, and that is the dollar. Made a double top peak D. MACD's turning down, but still very strong. Stochastics at 76, not so strong, not confirming this big move up. And the weekly chart is holding tight in this cup formation. Will it revert to the arch? And that's the big question for me going into a week from today. Next Friday, I think by next Friday, we're going to get a lot of clarity on many things, and I'll show you why. If the dollar breaks under 100.50 over the next week or so, then what's going to happen is we'll see what kind of strength is left in the golds, and if gold refuses to take out the low that was made, I'm having trouble. New keyboard, maybe I'll have to go back to the old keyboard. The low that was made this morning, if it takes it out, then there's a good chance it's going to test the low of the 27th of January at 1182. Now, what's really important about this is my thinking is that gold stocks, etc., are really well oversold. If you look at the XAU, it's trying to flatten out. The last 5 days, haven't gone down all that much. Why? Remember we defined this the other day? I was looking at the arch formation. I said the first big level of support is this little gap right here between the 28th and 29th of December. That's 77.42 and 78.11. Well, where did we go to yesterday? We went to 77.62. So this is exactly where the stochastic can try to have a little bit of a bounce. I think it needs more time, and there's a good chance that we'll test. We don't have to test this low of the 20th of December of 71.63, but I think we're going to test right in between, and that's going to be the big thing. What happens to the dollar? What happens to gold? Now let's put together the EUR, the USD, the currency pair, and that's got a nice strong leg C within that cup formation that I was drawing the other day. Still hasn't taken out the high of the 2nd of February of 1.082, but it's acting very well. The MACD is improving, stochastic's improving. I think the euro dollar is telling us that it has a little bit further to go on the upside. The monthly chart still has me worried. Weekly chart saved the day by rallying here, and the USD JPY has spiraled above, and that's the reason why I think the dollar could, in intermediate term, go higher, because USD JPY is showing strength, and I wouldn't say mimics the dollar, but it acts pretty trend-wise. It's very often following the dollar. The MACD is good at 85%. The MACD is good, stochastic is good at 85%. I like what's going on. I would have preferred more price movement, and if it cannot break and hold at 115.10. Of 16 cents. If it cannot get into the 115.90 to 116.30 level by Tuesday of next week, then I think it's got a bit of a problem. But right now it's making a cup formation, and that's moving higher, and it looks quite good. So now what I want to do is to go to the high-grade copper, HG. They've got a good bunch of good questions. Nice technical question for Technical Friday. This is Truff D in the copper. I think copper has been under tremendous pressure, but it's in the rectangle formation, and I suspect that copper has 265 is the upside resistance, and I would say that 255 has to hold, otherwise it could go down further. And the TLT we haven't done yet. TLT, horrible, 116.78. That means that in my weekly charts, we're looking at a break to the upside. Whoa, we need to look at that. But I'll get to some of the technical questions we have as soon as I return. Dow's up 35, S&P's up 6. Basil Chapman about to take a drink of water and catch his breath.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians out, just looking all over the place on all these different monitors to see who, what, where. What we're looking at here is the bonds, the 30-year yield. This is the T-bond yield. This is the white one, CYX, has gone to a leg F/B. Why do I call it an F/B? Because I've seen before where we've gone in this cup formation just to slightly higher highs before we started tumbling down again. And if I didn't have an alternative counter, it would have been wrong. My thinking here is from what Yellen has said, that she really wants to push rates higher, and that there's probably B and it's going to go to a C and a D. This is the 10-year T-note yield, the TNX. It's in leg D/B. I think this is a B by everything I'm looking at. But, A, B. No, let's just make it as simple as possible. I think it's a B the way I'm looking at it. And it has broken out as well. The 5-year has just broken out. It's also in DB, also forming the cup formation. So the breakdown means that 2 bars, you don't have more than 2 bars, not just to pull back, but to break down to take out the recent low, and that's the low of last week. In the TYX, that's 3106. In the TNX, that's 2329, and 1824 is the level in the 5-year. So keep it as simple as possible. We've broken out. Let me show you the chart behind it, because that's what I was asked about. The wood, the I shares of the timber forestry ETF still make a much stronger potential of a peak F than an alternate count B. And a C, it would be a peak C. And this one here has gone to a new recovery high, and that's the Philadelphia housing sector index, and that's in a leg F/C. So far we got a little mixed result there, but I'm really looking at bonds and say, hey, watch out. So here comes the next question. The question is, first of all, I was talking about the TLT. I'm really concerned about this. Yeah, this goes to the bonds as well, because the iShares of the Lehman 20-year Treasury bond, funny we still call it Lehman. I guess that's a tribute to the old Lehman company. It's so close. Look, this long, very long-term up channel inside track support level. So I'm just saying to you, this thing goes into the 115s. It's a real problem. It's a real problem for rates. That's all. Just keep it as simple as possible. It's got to bounce within another 2 weeks. It's got to get right back. The TLT has to get to the 125s. Okay. So the question is, hey, Basil, I always enjoy your analysis, commentary, and insights. On your stochastic chart, what study is the blue line overlaid on it? Great trading, Gene. Gene, thank you. So the blue line is always in this section here in the lower part. This is the stochastic with the volume and the histogram. The other one below it, in each case, is the on-balance volume. Remember, I use volume, but I use it as on-balance volume. And on-balance volume in TLT is way down, and the stochastics is 6%. It's the exact opposite of looking at the the indices that we were talking about up in the 93, 96, 97% area, 98 even, and now they're starting to pull back, but the weekly charts are still very strong. And now we've taken out the low on the left side. We've started leg E in the H pattern in the TLT. Be careful out there. And if you, Tom was talking about it, I was talking about it, many people were talking about it. If you were going to refinance when it was 3.5 for the 30-year, that's gone. It's 4 and almost 3/4 in some places, 4.5. Okay. So it's still extremely low historically. Next question was, yes. So in the den, here's the question. The question was the SMHs. Let's go through the SMHs. I mentioned a couple of times over the last week that we've been short. We're still short. Our stop hasn't been hit. I expected it to go a little higher. If it was going to go higher, it would go not just 1 penny above the previous high, all-time high of 77.82, made on the 21st of February. Now we've got a leg D, and the question says, Basil, can you look at the stocks and also is this a failure under 77.82 in the SMHs? So what I'm looking at here, you see the way the MACD turned up, and it did have price movement, but it hasn't crossed positive. And you see the way the stochastic has turned up and it hasn't gone to 80% to 72%. That either leaves a lot of room on the upside, because if they go back to being positive and the stochastic goes over 80%, then the SMHs, the Semiconductor Market Vectors ETF, should go way into the 79.50, 80, 81 area. But we've got a recycle here. And this says that we have now made a leg D in the weekly chart. I was waiting for all the Ds, and one of our astute tigers said, is it possible that you really have to wait for, the, which index was it? The IWM, was it? To get to leg D before you can actually say that you got all these Ds? And my answer was, no, I think that the leading indicators are the ones that I'm going to go with, and the other ones will follow. And even if there is a big drop, I still expect at some point you're going to get your D without breaking the lows on the left side. So here's my question to myself, that is, what would give me a signal to say finally we've got a reversal in the SMHs on the daily basis? And my answer has to be, if I can just get it right in between there, new mouse, a new clicking mouse. This is not good. Okay, there we go. Pull back, pull it down, go to this one. There it is. Oh my goodness, that took a while. And what we've got is the 120-minute chart has just gone to, oh, don't tell me that's a C with a D still to go. Oh, there it is. Good. So we've just gone to a D. You've skipped to an E, high, and then gapped up to an F. On a Friday, a gap up to an F, daily or 120-minute chart, always makes me a little nervous. I'm not sure why. I did a historical study on it, and ever since then I've said it. I can't remember exactly what the study was, other than to say, on a Friday, for fund managers to be gapping up something, it's like they've missed something and they're really chasing it. And I think that was the reasoning. So we are still short, and it's trading at 77.80. All I can say is this higher gap, an all-time high, this gap should be filled in. Does it get filled in before this thing goes from the 77.80 level to the 79s? I think it does. And I suspect that the high of Thursday of 77.33 will be hit by about Tuesday of this coming week. And if there is a takedown in the SMHs below 76.70, which is a good sign, but you really, until you're going to get some kind of a kind of sell mode in the daily, I could get a sell signal under 76.22, but I really want to see 2 or 3 trades under the 9-period moving average of 77.14 to say, great, I think I can now call it a sell mode. I hope I'm articulating my thoughts, and the only thing I'm going to make it really clear, if there's a move into the 78.50s, 78.80s, I have to say, oh, that's just unbelievable strength. But at this particular point, I think we're very close to some kind of a pullback. And we need that. You remember that I had a question about the XLV. We're still long the XLV. It's done very nicely. It's at 75.89. We've been long since 71. No big deal. It's 4 points. It's nice. But I was hoping that this would be a much longer term weekly and then a monthly trade. Remember, the defense, the peace president came in and the defense stocks, Raytheon, etc., went 3 to 4 times higher. I'm thinking that the health sector could do the same thing now with our with the new programs being produced. That was up 16, it's up 5.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, remember the E-mini 10-minute? I showed you, I said I'm going to draw in the arch formation. So this is the test of the arch formation. The way it looks, it could even make a second arch formation. But unless the E-mini spirals into the 2, 3, 7, 4s by about 2:30, 3 o'clock this afternoon, I think it's just kind of stuck here. I think we really have exhausted the upside in terms of the spikes and where it's been. But as long as you've got the semiconductor index holding, look at this. I was asked about Merck. Merck is trading down 4 cents. Made a peak deep, but hasn't broken down. But in the sense of chart formations, this is what I'm looking at. You see this large arch formation? So if Merck goes to at 65.87, next week if it is 87, it's a very unusual pattern, and it's just saying, the stocks in play are remaining in play. They're not breaking down. And look at the technicals. If I looked at the technicals, I would have said, oh, it must be making lower lows and lower highs. It was, but now it's stuck. It's holding very well. Okay, now let's go to a couple of questions. Let me check. Okay, so let's go backwards now. So Julie wants to know about XOP. So XOP is put in the bottom. With Exxon, no. I think it's the same thing. I don't like the weekly chart of the XOP. Together with XOM, yep, a nice bounce at trough E. This is a little different now. Exxon is saying, I'm trying to form a base, and I could hang around between, it's at 81.77. I could hang around between the 83s and the 80 level for just a while longer. My weekly chart needs a lot more veracity. It needs to take out the high of last week of 84.25. That'll be really good action. But until then, I think chop, chop, chop. That's really what I'm looking at. Hope that helps you there. Next question was, if I can see it, was GT1. Oh, J and K. This is a great question. J and K, what's it doing? Well, the J and K is the junk. This is the Spider BB Barclays high yield bond fund. Look, it's gone to a D in the monthly chart. That's what you want. It's gone to, I'm being very strict here in the monthly chart, but I'm not being very strict in the weekly chart. I'm using, because it's a bond fund, I'm using the 36.22 high of the week of the 25th of November and the high of 36.22, exactly the same, the week of the 2nd of December. I'm using that as a Chapman Wave Phantom Peak, Peak A. And I'm using it because I want to be ahead of the game. I don't want to think this is a C and, oh my God, we're going to go to a D. Everything about the technicals suggests that there could be a pullback. There's been a sharp plunge from the peak E top that was made at 37.22 on the 28th of February, kaplop, but it hits the 200-period moving average. So the answer to the question is, it's not a good sign that it's broken down. This is the actual bond itself, junk bond itself, high yield bond. But what is really important is that if it takes out 36.20, just 50 something less. If it takes out it's at 36.38 up 5 cents. If it popped and dropped. If it takes out 36.20 to $36 support on a weekly basis, I just have to suggest that monthly chart is saying to me it's going lower and yields are going to go higher. Hope that helps you there. There was one other question. I hope I can get to it. Yeah, love. Da da dee da 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 dee da da. Okay, peak E in a down. It's in a sell mode. This is Southwest Airlines. This is an alternate count G. I'm called G/B in the weekly. I'm saying timeout in the XAL in the airlines. Just be a little careful. And that's the XAL is suggesting same thing. Just a timeout at this particular point. But if the XAL closes under 105, it's trouble. Folks, if the VIX index trading at 1171 closes towards the 12 or higher today, that's going to say next week could be real choppy but down. That's what I'm expecting, actually. But if suddenly the VIX drops to it's at 1171, goes to 1150 or lower, we can have a pop into the close. Have a fantastic weekend. I'll try my best to get my charts out. Got a very busy weekend. Over the weekend, I'll start on Saturday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,